why don't economists think of the children? It's a slightly facile take on the question, but basically it's meant to bring out this idea that economists treat commodities and the world as if it's infinite, when obviously we're living on a finite planet. And I think that one of the aims of Move Your Money is to bring sustainability back into the conversation when it comes to finance. And this is something that a lot of charities and NGOs and organizations in this space try to look at, is that fundamentally the financial system is inherently unstable. It goes up and down and boom and bust, and these dramatic cycles that can have terrible implications on our societies and also global society. So, I ask why don't economists think of the children? Because
well, think of people in general, to be honest.
Sure. I mean, the children reference is more to think of the future.
Yes, I see. It puts the two things together, doesn't it?
Yeah, absolutely. So that's probably how I'd answer that question.
So very clever, good. Right, so tell me a little bit about Move Your Money. How did that start and what was behind it?
So Move Your Money is the campaign for ethical and sustainable banking. We promote alternative and ethical financial institutions and also hold the big banks to account for their unethical and unsustainable practices. So we were formed in the aftermath of the financial crisis, and we basically encourage people to move away from the too big to fail banks that crashed the economy and have caused the decimation of the welfare state, and towards those that are building a more sustainable, more green and more ethical future, so the building societies, credit unions and ethical banks that you'll find featured on our website. And since late 2011, early 2012, we've gone from strength to strength and done a number of campaigns around local authority finances, around the big banks' funding of fossil fuels, and also on our ethical banking scorecard, which rates nearly all the financial institutions in the UK on 26 metrics across 5 different areas that measures their environmental impact, their social impact, and their economic impact on the UK and beyond. And we're currently running a campaign against the sell-off of the Royal Bank of Scotland and arguing instead that it should be converted into a network of community and public banks that are focused on SME lending and their local economies.
Ah, yes, like the Sparkasse movement in Germany, which is so successful.
Absolutely, yeah, very much modelled on the Sparkasse model, and our campaign references research from the New Economics Foundation, Friends of the Earth, Scotland, Civitas, Res Publica, and a whole host of other civil society organisations which argue that actually one of the structural deficiencies of the UK economy is this lack of locally oriented financial institutions. We have a banking system that's almost unique in the developed world, that only relies on these big international, what's called universal banks that do investment banking and retail banking combined. And often what you see when you look look under the surface is that the retail banks, that's the day-to-day banking, the current account savings, the branch on the high street, is basically being used as a cash cow to milk consumers, to missell and to undermine people's security in favour of the investment banks, which generally in good times have very high returns and recompense their staff and their management with huge salaries and big bonuses at the expense of the retail depositors, but in bad times go bust and society has to pick up the tab, as we saw in 2008. So
yeah, it's appalling, really. And these massive international retail stroke investment banks are just so dominant in the UK banking sector. So what percentage are they?
That's right, yeah. So they currently control about 75% of the personal current account market and about 80% of the business account market. But when you look at deposits, it's even bigger. It's over 90% of the of deposits in the UK are held by the big 5. That's Barclays, Royal Bank of Scotland, including NatWest, HSBC, Santander, and Lloyds, which includes Halifax. And those 5 banking groups, as I say, dominate the vast majority of all banking in the UK. And that's a problem because it leaves vast swathes of the public underserved, whether that's rural communities, whether that's the elderly or the disabled, or generally people that can't be made a big profit off of. But also, significantly, it leaves small and medium-sized enterprises, the SMEs, the local shops and community-run or independent-owned businesses that form the bedrock of the UK economy, and that provide the majority of jobs in this country as well. Obviously, you won't have SMEs doing a Google and avoiding paying their taxes either. So these are big contributors to the economy, both in terms of employment, in terms of output, and in terms of tax take.
I was totally shocked with Frank van Leuven's of Positive Money's research that showed only 2% of those big banks' loans went to the small and medium enterprise, the SMEs. That's appalling, when it's about over 70% of Sparkassen money goes to the SME sector.
Yeah, that's right. And it's not just the Sparkassen in Germany. If you look at what's called stakeholder banks, banks that both operate to run a profit so they're sustainable, but that also operate in the interest of society. If you look at stakeholder banks across Europe, you'll find that it's not just the Sparkassen, but it's all of them as well. On average, in Europe, about 66% on average of their assets are lent to the real economy, whereas when they're compared to shareholder banks, these are the big universal banks that I was mentioning earlier, their average is around 37%, so it's almost half as much of their assets are in the real economy. So it's not just that these stakeholder banks, public banks, lend to businesses that actually employ people, that actually pay taxes, and that actually provide goods that people need and goods and services that people need and people want. But it's also that they're safer, they're less likely to cause financial crises.
Yeah.
And in fact, research shows that when financial crises do happen, they're better at mitigating the worst effects and helping the country recover. Yes, the
Sparkasse did. They kept lending into the small and medium businesses and helped them ride through the recovery, ready to go, so there wasn't that much unemployment.
I mean, in Germany, the Sparkassen actually increased their lending during the financial crisis, whereas shareholder banks, Deutsche Bank and other large banks operating in Germany, massively decreased their lending. And if you look at the performances of Germany versus the UK, for example, the UK took a lot longer to recover, and we're only now have grown our economy to the size that it was.
Because, of course, if they decrease their lending, the money supply goes down, which means there's less means of exchange within the economy to have us doing things, and so we go into recession. So because of the way the system works.
And the way there are some really key pieces of evidence that show this at work, which is in the UK, net lending absolutely plummeted because there was no other alternative business models or banking models to continue to provide that lending to functional businesses. So you see small traders and real economy, businesses having, going bust because they can't, receive any credit in the credit crunch because these massive international banks are just completely refusing to lend. Whereas, with public banks, they're able to advance that credit. They've got longer terms. They have this social license to invest socially.
For the public benefit. And they provide what Mariana Mazzucato calls committed patient money, which the private bankers don't provide, and which is what small and medium businesses need.
Absolutely.
Able to grow.
There's a number of sort of reasons behind why big banks don't want to lend to small and medium-sized enterprises, but ultimately
it's
boils
risky,
down to
isn't
them.
It's risky.
Well, it ultimately boils down to them not being profitable enough.
Yes.
They are profitable. Often they are profitable, but not profitable enough. Now, if you look at some of the, if you look at the Breeden report for RBS or some of the government's own research, it suggests that this need to satisfy shareholders, this need to give shareholders an extra premium on their investment every quarter to show new growth every quarter, creates an incentive to fund anything that will quickly show a return, even if that quick return goes pop later down the line. So that's why you see big banks.
Well, that's their bonuses as well, the bonus structure of
businesses.
Yeah, the bonus structure as well, rather than the public service structure, people that run the public banks.
I mean, I think, a key thing to mention and bear in mind for these types of public banks at all. They don't need to be controlled or dominated by politicians, which has proved so disastrous in the past, like, for example, in the Spanish cajas, which was a form of local banks which we definitely don't advocate because of political interference. There are various models where you can have the people whose decisions, the bank affects, like local businesses, like local representatives, members of the business community and local population included in a board of trustees who set strategy.
Well, you can see that with the Bank on Dave in Burnley, in that he's a local businessman. He got fed up that the other local businesses couldn't get finance, so he set it up himself, a local bank, and he makes the decisions because he's a local businessman. He knows the local area, he knows what's going to work, what's not going to work. He has the feel of it, and he's a perfect person to make those decisions,
Absolutely. I mean,
and it's been very profitable, even though it doesn't have a banking license.
That personal touch where you can know the people that you're lending to and you can assess them, individually and on their own merits and on their own peculiarities is really important for small businesses, because small businesses are often very, very different and need different types of tutoring and mentorship. Whereas with the big banks, they have standardized models that assess risk, which more often than not reject small businesses because they don't fit the standardized models that are basically created to fund big business. SME rejection rates are much higher in this country than the EU average or across the rest of Europe.
Really?
And that's not to mention this phenomenon where businesses are put off from applying for loans or finance because they feel that they will get rejected. So actually there's a really big gap there that's not being financed because these big banks that we rely on in the UK structurally aren't set up to serve it.
But it's a failure of capitalism, really, because there's a gap there of small businessmen who want to set up something or to expand and they can't get the money, and they need to have collateral, which they don't with Sparkassa. It's is the business model good or not? And they do. The Sparkassa do have algorithms, as that Civitas report showed, but it's set up in a completely different way, for the public benefit. But it's so. They have them so that it's less likely to be corruption because you can see what's going on, that they had to follow a certain pathway.
Well, I'm really glad that you brought up the point about collateral and assets, because there's a really good report by Demos called Community Chest, which shows very convincingly how the big banks in the UK tend to repeat and entrench patterns of regional imbalances, and one of the reasons is because of collateral. So, for example, areas in the northeast, in particular, have less funding for SMEs, and often have some of the lowest house prices as well. Now, the reverse is true in London. It gets some of the highest lending and some of the highest house prices, and this is because often small business owners are asked to put their house or their assets as collateral for a business loan. And so this means that if you're in an area that has, that is less likely to get funding for your SME anyway, and your house is worth less, or you don't have a house, you're even less likely to get it. So this is a sort of vicious circle that continues.
So it just perpetuates the inequality between the regions.
Well, absolutely.
That's all the more reason we need to have these local public banks in the northern cities, because that same sort of thing happens here in Bradford as well, because the housing is very cheap here. But yes, that's why it would be so good if under these devolution plans, the northern cities went for local public banks as well, brought in the Sparkassa outreach programme and got them to put together feasibility studies, concept documents. And they also save on banking charges, because if the local authority banks with the local bank, they don't have to pay such charges, and it's safer. It's not likely to all suddenly disappear when the bank goes under. Yeah,
I mean, it's really interesting that you bring up the northern cities and this idea of the northern powerhouse, because at the moment it's still quite a vague term. I think there's a real opportunity to introduce public banking and stakeholder banking into this discussion, because the whole idea is to give sovereignty and to give some self-determination to northern regions. But if those regions don't have the ability to raise finance by themselves, if they don't have the ability to create and retain value in their own economic areas, then it'll essentially be reliant on handouts from central government. Now, I don't know what type of devolution you imagine or you would want, but that's not how I imagine devolution. That sounds more like charity to me. So, local financing and local community banking has to be part of the Northern Powerhouse solution for it to have any teeth.
Yes, well, to be honest, the way people think of it here, and especially in Manchester, is that they're not very impressed with this elite-to-elite devolution, because it's a matter of Manchester getting more money to provide services, because all the northern cities have Labour administrations. Then they will get blamed when the services decrease because of lack of money, because of austerity. George Osborne is hoping the blame will go to the local Labour administrations that are delivering the services and not to his own Tory government. That's what the actual people in the areas think. It's probably very true. But having said that, I've been to a lot of these devolutionary debates, and I keep putting my hand up and saying, local public banks, local currencies, we need money locally. We can't keep thinking we're going to get money off a Tory government in London. And that's why I've put together this conference in Manchester on the 20th of February, which you're speaking at, and which has Ellen Brown from America, the guru of public banking, and Professor Richard Werner, who's the absolute expert on all kind of banking. And hopefully some of the local powers that be, will come and think this is a good idea. That's what I'm hoping anyway. Well,
I'm so glad that you've put together the programme, and it promises to be a really excellent conference, and I'm really looking forward to speaking and to meeting the other participants and audience members there as well. And I'm also really glad that you're putting your hand up and you're making those arguments in public forums about the Northern Powerhouse, because, as I said, without the ability to raise its own finance, the Northern Powerhouse idea has no teeth. Whereas the reverse is true. If finance is included, it can actually help to really push forward the independence of that area and to help drive the recovery that we actually need to see, rather than a mirage recovery which is based on increasing personal household debt and increased mortgages.
Yes, and it's so good that you can point to Germany and say the Germans do it. They are the economic powerhouse of Europe. The Sparkassen have been there for over 200 years. They look at their Mittelstand, their small and medium business sector. It's brilliant, and how can they complain about that? And obviously, like you say, it has to be designed well. And you've got the Sparkasse outreach programme, the SPFIC. They're willing to come over and help you design a Sparkasse-like local public bank. What could be better?
Absolutely, and I really want to press what this is about. It's about people taking a stand, standing up, and making it happen. Because when it comes to public banks, these need to be the pressure for them needs to be created by members of the public. Staffed by members of the public. It's only going to happen if we stand up and get involved. So, I would certainly urge your listeners to come to the conference, and also to check out moveyourmoney.org.uk and read up about more of these things, because there are several things that you can do to help encourage this process, whether it's lobbying your MP or getting involved in certain consultations. There's also ways of setting up your own banks or investigating whether or not your area is right for setting up a local bank. So there's loads of things that can be done by individuals to drive this forward. It's not just something...
Yes, we don't have to accept these 5 massive private profit maximising gambling banks. We've got to build up an alternative. And for me, you're in London, but for me, it's the regions have to build up, because we don't get enough money. Like you say, we're the ones that are more suffering from the City of London and everything that goes on. And I think it's the regions, these devolutions, Wales, Scotland, where the drive for separate banking and a kind of financial independence. I think this is where it'll come from. Absolutely,
and there's lots of really interesting organisations working on this. Some of which we've talked about already. There's the Community Banking Services Association that is set up. The Campaign for Community Banking Services as well has been opposing branch closures in local areas for years now. You've got ourselves campaigning on RBS and against branch closures of NatWest and RBS across the country. Yourself and various other organisations too. So
I just
it's
want
definitely
it
time to
on-
be getting involved and to
it's-
be taking action to help drive this change, because it's not going to be gifted to us. We have to
No,
force it.
no, I know. It drives me mad that it's not even discussed at these devolutionary events, and that it's not even on the table. I've had so much luck getting people together for this, the speakers together for this conference, that the time must be right. It must have been meant to happen.
I think so. I think so. And you'd be surprised, there are people in Parliament, in the Treasury Select Committee, amongst the Labour Party, the SNP, the Greens, and Plaid Cymru and various other parties that are interested in this idea. And I think it's an idea that's kind of coming of age in this country.
Yes.
We've seen what happens when you rely too much on, big five, multinational banking corporations that couldn't care one jot about, the regions or about your small business. In fact, some of them are actively driving small businesses into the ground in order to profit.
Terrible
look at RBS,
scandals.
it's been found to be doing this,
Yeah.
loads, even though it's bailed out by the taxpayer and owned by the taxpayer. So, what we're saying is this right? No, it's not. Are we going to do something about it? Yes, we are. And, the solution is to create a network of public community banks that can reverse this process and can invest in communities in a way that the big five banks are refusing to do so.
Well, let's hope it does happen, Why not?
Absolutely.
I mean, the Irish general election will be called any day now, and 4 of their parties have got local public banking on their manifestos, and other parties are actually sympathetic. So, we have the same language. That might pique interest within the UK, hopefully.
I mean, I think that's absolutely fantastic development. And, I think that what's important is, this isn't just about numbers or, about big ideas. This is about real people, in the streets. One of the reasons, or one of the effects of these big banks, cutting costs and constantly trying to cut corners, is the abandonment of communities that public banks would serve. So, I've been in touch with a community in South Wales where their last bank in town closed. It was an RBS bank, a NatWest bank, which should have stayed open because it's owned by the public, but they closed anyway. And, there are members of that community, one in particular called Mary, who, she's a full-time carer of her disabled husband. She herself uses a mobility scooter. Why should she travel 6 or 7 miles to the next town just to access her own bank from a publicly owned, just to access her own money from a publicly owned bank? It's ridiculous. And, people like that are really suffering, as well as the elderly who often can't or don't want to use the internet for online banking. And, it's becoming really difficult for people like that to serve those people.
It's Irish Rural Link who've been the driver for the local public banks in Ireland. That was one of their main gripes, in a way, about the closure of banks in rural villages and things like that, Well, I mean, but then when you look more at local public banks, it has more and more and more advantages.
Absolutely.
It's just a virtuous circle of advantages.
If you look at branch closures, they're happening at a faster rate than ever before, and it's all the big five banks that are doing it. At the moment there are 1,500 communities across the UK that don't have a bank at all, that don't have access to their own money, and this has various negative repercussions. But if you look across Europe, places like France have 3 times as many branches as we do in the UK, and Germany has nearly 4 times. I mean, branches is a difficult issue because, there are a lot of communities that are really badly affected by losing their branch, but at the same time, the growth of digital services means that, banks are increasingly closing bank branches. But I think that, if you look at recent research by the Social Market Foundation or even by the British Bankers Association, the majority of people still want bank branches that they can access. They still want bank branches to do the more complicated tasks, and bank branches aren't going to go away. So for the biggest banks to be, removing bank branches at a rate of knots, even where they promised not to do so, and not replacing them, is abandoning communities, and it's making it much harder for businesses in the regions and in rural communities to actually find the credit and the banking services that they need. So this is a real serious issue, and it's one that could be dramatically improved with the introduction of public community banks.
Yes. I mean, it's just, it's just the way to go.